my prediction of $2 million in today's dollars is exactly the same as Michael Saylor's prediction of $13 million in 21 years. Mm-hmm. See, because I just said today's dollars. All he's done is put compound interest for 21 years on $2 million to get to $13 million. Or not him, but that's how the math works, okay? Yeah. Compound interest is the eighth wonder of the world. Somebody said that. I don't know who it is, but it is true. It's an exponential growth of your debt because of compound interest. It's too late. It's over. You cannot get out of this debt spiral. It is locked in right now.
Popular Bitcoin bull and sound money advocate Greg Foss has maintained a bold $2 million price prediction for Bitcoin since at least 2021. Back then, he argued that Bitcoin's true value far exceeds its current price, viewing it as insurance against the declining credit quality of fiat-issuing sovereign nations. According to Foss, Bitcoin serves as credit protection on a basket of fiat currencies, including the US dollar, which is losing approximately 8% of its value annually, despite being the world's reserve currency. Foss is convinced that fiat currencies will continue to debase at an accelerated rate due to the global debt spiral, and he is 100% certain that all fiat currencies, including the US dollar, will eventually go to zero. Because of this, he stresses the importance of diversifying portfolios with hard assets like Bitcoin, gold, and real estate. However, he believes Bitcoin is the fastest and strongest contender in the fight against fiat debasement, with exponential growth ahead as more people realize traditional asset classes offer no real protection. In a recent interview with Natalie Brunell, Foss reiterated his $2 million Bitcoin prediction, noting similarities with Michael Saylor's $13 million projection by 2045. Although Bitcoin's current price may not align with Foss's expectations earlier this year or in 2022, the former credit analyst remains confident that the long-anticipated price explosion is imminent. Stay tuned for clips from Greg's conversation with Natalie and recent bullish tweets from anonymous Bitcoin analyst PlanB.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Well, let's start with over the last year, some of the progress that's been made. You can talk about the ETFs, but they were inevitable. They started in Canada a couple of years earlier than it was in the United States, so it's hard to believe that Canada was a leader in the ETF space, the Bitcoin ETF space, but yeah, we were. We expected it to come to the US. What's really important is what the research that BlackRock's putting out right now on Bitcoin and grasping some of the nuggets that the Bitcoin community has been using for literally 8 years. You know, the concept of digital gold. Pretty simple, but you know, it's when BlackRock says it, it has a little bit more penetration within the community. They say it's a non-correlated asset, a risk-off asset. Now, I don't believe that it'll trade as a risk-off asset in the next downturn, and I believe that it will probably still be correlated. There'll be hedge funds that will short Bitcoin to hedge their equity exposure or other TradFi asset exposure. But in my opinion, they shouldn't be, because, you know, I think of Bitcoin as a risk-off asset. As you know, I valued Bitcoin using credit default swaps on sovereign debt and was able to come up with a valuation of Bitcoin based on the debt metrics, the market that I had grown up with for 30 years, the debt markets. And everybody should know that the debt markets are far more important than the equity markets. They tend to get things and sniff things out earlier. It's amazing what BlackRock is saying. You know, there was the headline that I won't be able to say it verbatim, but they basically said BlackRock suggests owning Bitcoin as a hedge to the $35 trillion of debt, of U.S. debt, in case that shouldn't mature or roll over. And we've been saying that the whole time, right? Like, it's the debt spiral, the mathematics, you know, do the math. It's so simple when you see the metrics of the fiscal situation in the US, but also in every other G7 nation in the world, as well as all the other 200 countries that aren't in the top economies. Everybody runs the same playbook. So BlackRock saying it is extremely important. Did the price get to where we want? It's still a rounding error. You can't look at what the next $10,000 fiat dollar move in Bitcoin is. Look out 5 years, and I believe that you'll be talking about, instead of $10,000 moves per day, or not per day, but cyclical, you'll be talking about $100,000 moves in Bitcoin. What is the next $100,000 move? So that's so important that you get an established player, world's largest fund manager, and Larry Fink on CNBC telling Jim Cramer, I was wrong. It's possible to be wrong. And then you change your view.
The BlackRock paper that Foss is referring to was authored by the firm's ETF chief investment officer, its head of crypto, and its head of global macro fixed income. In this paper, the authors argue that the world's largest asset management firm is quietly preparing for a potential $35 trillion Federal Reserve crisis, with Bitcoin playing a key role. They predict that as concerns grow about the US dollar nearing a potential collapse, more investors will turn to Bitcoin as a safe haven. The rising worries about US federal deficits and mounting debt, both domestically and internationally, have increased the attractiveness of alternative reserve assets like Bitcoin as a hedge against possible future disruptions to the US dollar. The authors noted that this trend is also emerging in other countries with significant debt accumulation. Based on their interactions with clients, this explains a substantial portion of the growing institutional interest in Bitcoin. BlackRock is echoing many of the same arguments sound money advocates like Greg Foss have been making for years. This marks a full circle moment, as BlackRock, one of the most powerful financial institutions globally, now shares these views. Even more striking is that BlackRock's CEO, Larry Fink, one of the most influential figures in finance, has begun advocating for Bitcoin on CNBC, standing in opposition to the very system on which his empire was built. Let's return to the video.
They definitely see some weakness in the economy, okay? The Beige Book, what they see in the Beige Book that's not published, they have a first look at that. I have some anecdotal evidence. I was vacationing in Maine for our regular summer vacation. This was the lightest traffic that I've seen coming into New England over the Labor Day weekend that I've seen in the last decade, okay? People not traveling. The restaurants were not nearly as full. They should have cut on a strength of the perceived strength of the economy, not just American economy. Have they noticed what's happening in China and understanding that China led global growth for the last decade? And China now has 90 million empty condominiums in a country whose birth rate is declining, so that who's going to live in those? The China stock market's getting shredded. The real estate prices, Evergrande, fallout. No one's talking about that. So does the U.S. set policy for the whole world? I'm afraid they do. So what do we have to worry most about? Stagflation. This will be something that I think we really have to look at. And Mark Moss mentioned this on your podcast as well. He's worried about the inflation component of not holding rates high enough to snuff out inflation. So I think there'll be stagflation. Jamie Dimon thinks has similar thoughts. I think Jerome Powell, the jury's out as to whether he'll be the greatest Fed chairman. But in the short term, he's engineered a landing, and it has not been a crash landing. So I applaud him for that, but it's far too soon, in my opinion, to say that it's been a success. And it's because of things like China, because of the potential for stagflation, because of anecdotal evidence like restaurant index, the U.S. restaurant index, and the lower end of the consumer credit concerns with the low end consumer. All of these things are flags for me that I'll be looking for.
In other news, anonymous Bitcoin analyst PlanB recently outlined an exciting scenario for Bitcoin investors, predicting a rapid price surge from just above $65,000 to $1 million by the end of 2025. According to his timeline, Bitcoin could rise to $70,000 in October, traditionally a pump month. In November, a Trump victory in the U.S. election, ending the Democrats' war on crypto, could push Bitcoin to $100,000. By December, massive ETF inflows might drive the price to $150,000. The momentum continues into January, with crypto companies returning to the U.S., boosting Bitcoin to $200,000. In February, the power law crew would sell, causing a temporary drop to $150,000. By March, Bitcoin could be declared legal tender in Bhutan, Argentina, and Dubai, pushing the price to $300,000. In April, the U.S. could begin building a strategic Bitcoin reserve under Trump's leadership, sending Bitcoin to $400,000. May might see other countries, excluding the EU, joining the race, driving the price to $500,000. In June, several AI systems could start using Bitcoin for autonomous arbitrage, pushing it to $600,000. From July to December, intense FOMO could drive Bitcoin to an all-time high of $1 million. By 2026, Bitcoin could enter a distribution phase, dropping to $500,000, and in 2027, another bear market might bring the price down to $200,000. Do you agree with PlanB's scenario for Bitcoin? Share your thoughts in the comments, along with your reactions to Greg Foss's interview. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.